Well, it's most egregious in the momentum trading by novice investors lured in by new types of brokerage operation like Robinhood. Robinhood trades are not free. When you pay for order flow, you're probably charging your customers more and pretending to be free. It's a very dishonorable, low-grade way to talk. And nobody should believe that Robinhood's trades are free.
Well, just when you thought it was all over, Gamestop Short Squeeze 2.0, baby. Here we go. Get your wallets out, fire up your Robinhood accounts. No, I'm just kidding, obviously. Definitely don't do that. But what's crazy, we thought this whole situation was done and dusted, and right now, GameStop is rebounding hard. It is back up to $132 per share, up 6.6% overnight. And since the 23rd of February, the stock has come up from $45. So it's risen almost 200% in 7 trading days. So we'll have to see how long this rise in the share price lasts for GameStop this time. But in the meantime, Charlie Munger himself has sat down in the past week and answered some questions from Daily Journal shareholders. And it was a very long Q&A section, like 2 hours or something like that. All of it's on YouTube if you want to go watch the whole thing. I definitely encourage that. I'll leave that linked in the description. But in that Q&A session, popped up a lot of questions about the whole GameStop short squeeze Robinhood saga. And boy oh boy did Charlie Munger have some very interesting remarks on the situation. Now, we should go through what happened first, and I don't want this video to get too dragged down in the explanation, so check out the video coming up on the screen right now if you want to learn more. However, if we summarize what happened, so GameStop, it's a heavily shorted stock. About 140% of the outstanding shares were held short. Now, these short sellers were big money managers like hedge funds, and they're going to benefit if the share price went down. But on the flip side, they would get screwed a lot if the share price went up. Now, Redditors over on Wall Street Bets saw this, banded together, bought the stock, which sent the share price up, which screwed over the short sellers because the share price spiked. A lot of the short sellers had to cover their short position, and in doing so, that only feeds into the buying pressure, pushes the share price even higher. And that situation is called a short squeeze, and a short squeeze in reality looks exactly like this, exactly what happened to GameStop. Now, here's the interesting thing. We saw it go up, and we've also seen it come down, and that's because what happened was Robinhood stepped in, and a lot of other brokerage sites, wasn't exclusively Robinhood, and they essentially stopped their users from buying GameStop shares. So that obviously evaporated the buying pressure on GameStop. No buying pressure, share price falls down, and the short sellers that were holding on during that time made a lot of money. So that's a short summary of what actually happened with GameStop. And next up, let's hear Charlie Munger's view of the events that transpired.
Dear Mr. Munger, please share your thoughts on the recent Wall Street Bets GameStop short squeeze. It seems to involve a lot of your standard causes of human misjudgment.
Well, it certainly does, and that's the kind of thing that can happen when you get a whole lot of people who are using liquid stock markets to gamble the way they would in betting on racehorses. And that's what we have going in the stock market. And the frenzy is fed by people who are getting commissions and other revenues out of this new bunch of gamblers. And of course, when things get extreme, you have things like that short squeeze. It's not generally noticed by the public, but clearinghouses clear all these trades. And when things get as crazy as they were in the event you're talking about, there are threats of clearinghouse failure. So it gets very dangerous. And it's really stupid to have a culture which encourages as much gambling in stocks by people who have the mindset of racetrack bettors. And of course it's going to create trouble, as it did.
So you can tell he's clearly not very impressed, and first and foremost, he definitely puts the bulk of the blame on those speculators that are actually out there buying these sort of stocks, because ultimately they're the people that actually cause silly situations like this to occur. These type of people are not your typical stock market investors like you or me, but they're the people that, you know, are filling out their betting slip in one hand while they're buying their stocks in the other hand. They're those sort of people. They are the gamblers that just treat the stock market as this funny old little game. They're trying to get rich quick. They don't really care about, you know, long-term value investing, building wealth, any of that. They're kind of just in it to gamble. But he also puts a fair amount of blame on the brokerage sites that are obviously incentivized to reach out to the everyday Joes and get as many people signing up to become novice investors and, you know, just join in. The stock market's a great place to be, you know. You don't need to know anything. Look, Simon and Joe
both invest in stocks.
Simon just copies Joe's trades thanks to eToro's trade tracking whatever, and look, he's made 20% this year. So yes, ultimately the people that are most at fault are the people that are directly causing this situation, the speculators that are banding together and just buying these kind of meme stocks. But Charlie does put a lot of the blame onto those brokers that are just trying desperately to get more signups, more users, and encourage more trading activity. And that's what he talks about in this next clip.
Could you give us an update on your assessment of Berkshire excess in the system? Where does it appear most egregious?
Well, it's most egregious in the momentum trading by novice investors lured in by new types of brokerage operation like Robinhood. And I think all of this activity is regrettable. I think civilization would do better without it. You'll remember that when the first big bubble came, which was the South Sea bubble in England back in the 1700s, it created such havoc eventually when it blew up that England didn't allow hardly any public trading in securities of any companies for decades thereafter. It just created the most unholy mess. So human greed and the aggression of the brokerage community creates these bubbles from time to time. And I think wise people just stay out of them.
There you go, human greed and the aggression of the brokerage community. And going back to that first clip that I played, Charlie Munger said, you know, the frenzy is fed by those who are getting commissions and other revenues out of this new bunch of gamblers. And you might say, well, hold on, Brandon. Actually, trading on Robinhood is completely free. No, it actually isn't, because you got to remember, Robinhood has to make money somehow. And, you know, if they're not making money from you, they're still making money somewhere, somehow. You have to remember with any business, with any service, anything where it's free for you, the customer, you're not actually the customer. You're in fact the product. And this is exactly the case with Robinhood, because the way that Robinhood makes money is they sell their order flow to somebody else, usually like a hedge fund or something. And then what the hedge fund does is they can see the orders that are going to be coming in so that they can then get on the other side of the trade, and thus they can make money off of you. So Robinhood are essentially selling you out in order to offer you commission-free trading. Now, don't believe me? Well, have a listen to Charlie Munger himself talk about this.
What is the biggest lie currently being perpetuated by the investment complex?
Well, commission-free trading is a very good candidate for that if you want to emphasize disgusting lies. Robinhood trades are not free. When you pay for order flow, you're probably charging your customers more and pretending to be free. It's a very dishonorable, low-grade way to talk, and nobody should believe that Robinhood's trades are free.
There you go, from the man himself. But going back to the prior clip, while Charlie is obviously showing his discontent, he's also cautioning us. This sort of activity from brokerage sites that just want more users, more trades, more signups, you know, more investing activity, I have to be careful, because this could lead us to some sort of big financial mess. And that was obviously stress tested a little bit with what happened first time round with Gamestop.
When things get extreme, you have things like that short squeeze. It's not generally noticed by the public, but clearinghouses clear all these trades. And when things get as crazy as they were in the event you're talking about, there are threats of clearinghouse failure.
At the time, we were seeing record levels of trading volumes and trading activity, so much so that Charlie Munger himself was saying there was the risk of clearinghouse failure, so something had to change. And paraphrasing his words from before, we ought to be cautious so that we don't cause some sort of massive mess, as he described with the South Sea bubble, where the solution was England just halted the public's ability to trade stocks.
It created such havoc eventually when it blew up that England didn't allow hardly any public trading in securities of any companies for decades thereafter.
Because obviously if something like that were to happen, then we all lose. So anyway, I found that really interesting. I thought you guys might find that interesting, you know, straight from the horse's mouth. Ultimately, Charlie Munger, yes, first and foremost, the blame comes from the speculators, the gamblers in the stock market that kind of make these situations occur. However, he's definitely clearly got some pretty scathing words for some of those brokerage sites that are just hell-bent focused on new sign-ups, more trades, you know, more trades equals more revenue. And, you know, if trading doesn't necessarily equal revenue, then more trades equals more order flow to sell to someone else that wants to buy it. That's the case of Robinhood. So it still means more revenue at the end of the day. Anyway, guys, I thought you would really enjoy that. Let me know what is your opinion on, you know, whose fault it really is, this GameStop saga. What did you think of Charlie Munger's opinion? Definitely let me know what you think down in the comments section below. And if you did enjoy this video, make sure you leave a like. I really do appreciate every single like because obviously it just helps this video get shown to more people, which really helps support the channel and helps the channel grow. So I appreciate that. And if you wanted to have a watch through of the whole Q&A section of the daily journal annual shareholder meeting, then I'll leave that linked down the description below. I'll probably leave a timestamp because they go through some boring stuff first and then they get stuck into the Q&A. So I'll leave a timestamp where the Q&A starts. And he talks about a whole range of different things. It goes for like over 2 hours. So it was very, very interesting. He basically covered every single topic under the sun, really, from Bitcoin, Tesla, GameStop, the state of the market, everything. So if you're interested, check that out. I'll leave it linked in the comment section, or yeah, I'll leave it linked in the pinned comment and in the description. All right, guys, that'll do me. If you'd like to learn about how I personally go about my investing, then check out PROFITFUL. We've got Introduction to Stock Analysis. We've got Stock Market Investing for Beginners. If you just want to get started out, get some help starting out in the stock market, doing it the right way, the Charlie Munger way, the Warren Buffett way. Check out those courses, and of course that also helps financially support the channel too, so I really appreciate it. But that'll do me for today, guys. Like, subscribe, all the good things, and I'll see you all in the next video.